The Farm Bill Conference continues in Washington, but the time frame is getting tighter to complete a deal before Thanksgiving and the end of the year. At the Crop Insurance Workshop in Grand Island Wednesday, UNL Extension Public Policy Specialist Brad Lubben said we're not only closer to completion on a new 5-year farm bill, but we're also closer to the cliff, in that if it doesn't get done now, when will it?
Well, one could say we're closer to completion than we've ever been with this bill. It's taken 3 years to get here, but for the first time we actually got a bill to conference committee. And you've got minds on the conference committee that, while they have to sort out some major differences, also can produce a final version here for consideration in both chambers.
As you look at the House and Senate versions when it comes to crop insurance, how differing are those two?
Well, in terms of what they offer for new crop insurance programs, they actually are very similar, with a supplemental coverage option to add on to existing policies offered in both chambers, a stacks program, a similar insurance program for cotton. But there is a difference in them in terms of some compliance provisions. The Senate includes conservation compliance, and it also includes means testing for crop insurance eligibility in terms of receiving the benefits of the premium support. The House does not currently include those versions, but that's a big negotiating point here in conference.
There's still that battle between the northern states, I guess you call them, or in the Midwest, and those southern states that don't necessarily produce as much corn and soybeans and produce the other crops, right?
Right. Traditionally, farm bills have been more parochial than partisan, as they say. The parochial interests of southern commodities have been historically more reliant on the price support mechanisms, and not surprisingly still favor a price-based safety net compared to revenue. The Midwest commodities strongly favor a revenue-based safety net, and part of that is a recognition that while prices have substantially increased in the last several years, such that the old price-based safety net is just not as relevant as it was. So you've got this difference of, what am I really trying to protect, price or revenue? You have a difference also of whether I'm trying to protect a guaranteed price level or whether I'm protecting an average revenue level.
Crop insurance is a sticking point, sure, but obviously the nutrition program is probably more so. Right.
It's clearly the number one issue for the conference committee to resolve, nutrition legislation. Will we make cuts to nutrition? Almost certainly. The question is how much. The Senate proposes $4 billion in cuts. The House proposes $40 billion in cuts. Magnitudes of difference. The real debate isn't exactly on what the number should be. The real debate is on these eligibility rules that determine the estimate of how much each program costs. Adjusting those is the real question mark here.
You look at a program like Sure that'll go away. When this thing's all said and done, how different do you think this landscape will be for farmers in Nebraska?
You know, when you look at what direction we're heading with farm programs over time, we've certainly increased the emphasis on risk management as opposed to traditional income support. When it's all said and done, we're going to have a farm program decision, presumably in 2014 if we get the bill done. We'll have a farm program decision that makes producers try and manage a commodity program coupled with crop insurance, coupled with a supplemental coverage option, an add-on crop insurance program. It's complex. It's a more complex decision than we've ever had. It builds on things we know and understand, but the complexity just keeps growing.
I want to talk about one more aspect, and that's a conservation program. As you look at it, what do you expect that to be like if this farm bill does get completed?
Well, it's interesting. Conservation has been certainly a favored part of the farm bill, at least in the last 25 years, since substantial investments in the 1985 farm bill. The CRP program is roughly a $2 billion a year program. It's actually getting smaller, less acres in the CRP over time, and revising the legislated caps on the CRP to reflect that. But that's getting smaller as commodity prices have encouraged land to come out of retirement. The rest of the conservation program portfolio is actually growing. It's still growing. Even facing budget cuts in the new bill, the cut is a cut in the rate of growth. It's not actual cuts relative to current spending, it's just a slower rate of growth. Conservation is growing. It's certainly politically popular. It's actually bigger than the commodity title, and it continues to be a major investment for the U.S.